Welcome to Understanding Financial Aid. Today, we're going to talk about what financial aid is, the cost of attendance, the financial aid offer, different types of financial aid, and then a little bit about student loans as well. So, of course, diving right into what is financial aid. So, financial aid consists of funds, which can be scholarships, grants, loans, or work study, that are provided to students and families to help pay for post-secondary educational expenses. So that way you'll have some type of aid to help you pay for college. Now, the first step, how to apply for financial aid. Of course, that's filling out the FAFSA, the free application for federal student aid. That's something that you have to continue filling out each year in order to be eligible for financial aid from year to year. It will be up to your financial aid office. They are the ones that will actually determine your eligibility for financial aid. And if they determine that you're eligible for that, then they will send you a financial aid offer. Then it would be up to you as a student to respond to the school's aid offer. That's normally doing that from the school's portal electronically, and that's where you can go and either accept or decline the awards. Now, the first part in determining your financial aid is where we're looking at the school's cost of attendance. You can normally find your school's cost of attendance on their website. So cost of attendance, or COA for short, is an estimate of what you can expect to pay for 1 year of school. So this would include tuition and fees, an estimate of room and board, books and supplies, transportation, and even some personal expenses. Now, when looking at the school's cost of attendance, you might see one for living on campus, living off campus, or living with parents. So you might see a variation there. Now, the student's financial need is calculated as the difference between the cost of attendance and the expected family contribution, or EFC for short. And that's where the financial aid office has to determine what your financial need is so they can determine what types of financial aid that you're eligible for. The expected family contribution, or EFC for short, is what you will receive after you fill out your FAFSA. So after you fill out your FAFSA, you'll get your EFC, and that will help the school determine what types of financial aid you might be eligible for. Now, we're talking about direct costs versus indirect costs and what those charges may be. Now, direct costs to the school are things that are billed and directly owed to the college. So as we talked about the cost of attendance and what's all included there, these direct costs would be for tuition and fees. That would always be a direct cost. And then if you are living on campus, then on-campus room and board would also be a direct cost. So if you're going to be living on the dorms, then you know that money will have to be paid directly to the school so that you can pay for your housing for that particular semester or school year. Now, indirect costs are things that are not billed or directly paid to the college, but are included in cost of attendance. So for example, transportation, books and supplies. Now, books and supplies are things that, yes, you might be able to go and buy at the bookstore, but not always is it directly paid to the college. Now, books and supplies for some courses and at some institutions, they do include that as a direct cost. So that's something you'd have to check with your college directly. Now, if you are living off campus, then that means you're off campus room and board. So that would be considered an indirect cost, because if you're living off campus in your own apartment, then you would be paying your rent to like a landlord along the way. So at that point, that would be an indirect cost. You're not paying that directly to the school. And then any other personal expenses. Now, if you're living on campus and you have a meal plan, of course, that would be a direct cost, because that's part of the dorm. Having a meal plan, that would be a direct cost. If you're living off campus in your own apartment or an apartment with the roommate, things like that, then you are normally responsible for your own food unless you were to get some type of commuter meal plan if your school offers that. Now, your financial aid offer. Now, when the financial aid office awards you financial aid, they're assuming, or they're usually going to be awarding you based on you being a full-time student. So if it ends up being that you don't register for full-time enrollment, then at that point, they may have to prorate or adjust their aid offer based on how many hours you're actually taking. Now, if you are a continuing student in college, you must also maintain satisfactory academic progress. Now, for federal financial aid, satisfactory academic progress, or SAT for short, is usually a 2.0 GPA in order to continue receiving aid. If you get below that, normally the financial aid will communicate with you what the steps are that you must complete in order to continue receiving financial aid. Now, you might have other types of financial aid on your award offer. If you are awarded some type of aid from the school, whether it's a grant or scholarship, they may also require you to maintain a higher GPA. So you'll always want to see if your offer a scholarship or something like that is determined what is required of me in order to renew or to maintain that particular award. Now, different type of awards that you might see on your aid offer are grants. Now, grants are typically need-based. You do have to show a financial need. That's the outcome of your FAFSA. Grants do not have to be repaid, but if you withdraw from school or you drop courses or you're not meeting obligations of a grant, then they can require you to pay back portions or all of those grant funds. So you have to be maintaining your eligibility to continue to receive those. Now, if you are offered a student loan, of course, a student loan is something that must be repaid. Of course, federal student loans, you start to repay those 6 months after you either graduate, or withdraw, or just stop attending at least half time. With student loans, you only want to borrow what you actually need. When you're offered it, you're normally going to be offered for the maximum, but you just want to determine if you actually need the full amount of student loans. When you're accepting awards, you can always accept or decline, or you can accept a partial amount. So if they award you a full $5,000 loan, you determine I only need $2,000, then when you're accepting the award, you can change the amount to the lower amount that you actually want to accept. Now, for Federal Work Study. Federal Work Study is a program that's implemented by the school where you work basically to earn money to help pay for school. This may be a job that's on campus or in one of the campus offices. Now, this particular position, you usually have to actually apply and get hired by your college or university. So maybe not every single student that sees Work Study on their award offer may actually get the job, because you have to go through the process to actually apply and get chosen for the position. The Work Study is a part-time employment while you're enrolled in school. It's definitely a good option if you need to work, because the school knows your priority is being a student. So they'll allow you some flexibility if you need to change your school schedule, or maybe need some extra time to focus on studies. They know your main thing is to graduate. And so normally you have some more flexibility as far as working compared to some outside off-campus jobs. Now, of course, we talked about the different types of aids that were available: the grants, loans, work studies, scholarships. These are some examples of some awards that you might see on your aid offer. So if we're looking at federal financial aid, some examples of federal financial aid might be a Pell Grant. You might see that on your aid offer. Or SEOG. SEOG stands for Supplemental Educational Opportunity Grant, which is another grant that would be awarded to you by the financial aid office. Again, federal financial aid would be federal student loans or federal work study. Those are all examples of federal financial aid. Now, state financial aid. Every state has its own funds and process for distributing aid, which often consists of grants and scholarship. These are some examples of state financial aid for the state of Texas, which is the Texas Grant, and the TPEG, which is the Texas Public Educational Grant. Again, all of these are awarded by the financial aid office. Now, institutional aid is aid offered by that particular college. So it might be a scholarship or grant that might be based on maybe your major, or it might be merit-based, which is based on your GPA or things that you've accomplished, or it might be just based on the scholarship application that you applied by that particular school. So again, all of these things are different types of aid or examples of aid that are awarded by the financial aid office that you might see on your award offer. Now, we're going to go into student loans. So what are federal student loans? Of course, these are loans from the Department of Education. You must fill out a FAFSA in order to receive federal student loans. The benefit with federal loans is that they offer a low interest rate. Now, the conditions and benefits are set by the Department of Education. So, of course, with this, while you are in school, as long as you remain attending at least half time, then there is no payments due for subsidized and unsubsidized loans. We're going to get into kind of the differences of the different types of loans, but the repayment options and all of that are set up by the Department of Education. So it's all regulated and standard based on the type of loan that you take out. So as we're going into the types of federal loans, so subsidized loans are a need-based loan. And the benefit to the subsidized loan is the government will pay the interest during certain eligibility periods. So if you're in school and attending at least half time and you have a subsidized loan, the government will pay the interest during that time. So if you took out a $2,000 subsidized loan freshman year and you continued in school attending at least half time, then by the time that you graduate, that loan would still be $2,000. Whereas the unsubsidized loans, they are not need-based and the interest begins accruing while you are in school. So on the flip side of that, if you were to take out a $4,000 unsubsidized loan while you are in school, and let's say you remain in school and 4 years later, it's time to graduate, that $4,000 loan is going to be higher because it's 4 years worth of interest that has accrued on the loan. So one thing to keep in mind is you can always opt to make interest payments or any payments at all while you are in school. It's just not required if you are attending at least half time. Now, there is also the PLUS loan. The PLUS loan is available to parents or graduate and professional students. Now, the difference with the PLUS loan, it is a credit-based loan. So they will check your credit and you have to be credit worthy in order to take out that loan, whereas the subsidized and unsubsidized loans are not a credit-based loan. So the Parent Plus loan is a loan that's available to parents of a dependent undergraduate students. So if you filled out the FAFSA with your parental information on it, then the Parent Plus loan may be an option for you. Or a Graduate Plus loan would be available to those students that are graduate and professional students. So just depending on where you stand would determine on what type of loans would be available to you. Now, there are private student loans that are available and may also be an option, but in general, if you have to borrow for college, federal loans are much better to take out than private loans because the loans for students are not credit-based. The subsidized and unsubsidized are not based on credit, and they have more protections on the federal side than on the private loans. But in general, private loans are loans that are offered by lending institutions, such as banks and credit unions, and the interest rate on them is based on your credit worthiness. So normally if you have a higher credit score, the lower interest rate that you may get, whereas the lower credit score, the higher interest rate you may be offered. If you don't meet the credit requirements, then you would have to get a cosigner that is credit worthy in order to take out the loan. The FAFSA is not required and the repayment options are set by the lender, which means that you may have to make payments while you are in school on private loans. It's not a given like on the federal side. So you may also have different interest rates if you choose to postpone payments while you're in school, or a different interest rate while you're in school or when you graduate. So there's lots of different conditions that would be set by that particular lender. Now, in the event that you don't get financial aid, or you're not eligible for financial aid, or maybe the financial aid is not enough to cover what's owed to the school, then the next options would be to pay any balance owed to your college or university in full, or you can look into the school's payment plan options. Most college or universities do also have a payment plan. So usually the payment plan is based on a percentage that's due upfront before the tuition deadline, and then the remaining amount is broken up into smaller amounts that are paid throughout the semester. In the end, the remaining balance must be paid by the end of the semester, because at that point, if it's not, then you won't be able to register for classes for the next semester. They could put a hold on transcripts or diplomas and things like that. So you want to make sure that balance is paid in full. Now, we did give an example on here. So if you owed the school a $3,000 balance for the fall semester, their payment plan requires you to pay 25% upfront. And if that payment due date is August 18th, then that means that $750 would be due on August 18th, and then the remaining payments are due the 15th in each month. So you see it, they broken up into 4 payments of $750. So that might be more flexible for your budget or for your family's budget, rather than paying all $3,000 all due at August 18th. This allows you to make monthly payments and allows you to pay $3,000 by the end of the semester instead of everything all upfront. Now, as we talked about budgeting, right? Budgeting only for the amount that you need. So, of course, you want to think about what you can expect to earn when you graduate. You can go to the Occupational Outlook Handbook at the website listed there and look and see the career that you plan to go into and see what the expected salary is to see, if you're borrowing a reasonable amount. The other thing that you can look at is look and see how much you're borrowing. So you can use the loan simulator, which is on the studentaid.gov website, to estimate, okay, if I borrow $10,000, what will that monthly payment be? And see if that's something that you think that's something you'll be able to afford when it's time to repay and you start earning that salary that you are expecting to earn at the same time. So these are just a couple of resources for you to access. Studentaid.gov is where you would be able to fill out your FAFSA. Also look at the loan simulator. If you already have loans, you can also view your loan holder on there as well. Thank you for joining our presentation on understanding financial aid.